Hello, good day. My name is Hussain. I'm Forex Optimum Broker, Financial Analyst. I'm back again to bring you all once again some updates in the financial markets. The second trading week in March is full of positive sentiment. Stock markets are all on all-time highs as S&P 500 Broad Market Index soared about 3,950 points. Brent crude prices went up to about $69 per barrel, and US dollar is gradually losing strength to the other G7 currencies. Investors are full of optimism after US Congress has finally approved $1.9 trillion relief bill that, according to the US Treasury Secretary Janet Yellen, the most important thing is to get our economy back on track. Maybe it is so, although some doubts could be expressed considering huge misbalances in the stock and commodities market. But investors are desperately waiting for the fresh 10 of billions up to 150 billions dollars that Americans would bring to the market after receiving direct payments of $1,004 per person. This money may allow some large market player to jettison some overvalued shares that may suffer sharp correction in case of another Treasury's yield rally. Joe Biden may sign the relief bill today so that every American will receive $1,004 checks by the end of March. Thus, markets may witness the increasing volatility next week with making investors nervous. The Federal Reserve may support such scenario if the monetary policy maker would express its little concern over rising inflation that topped 1.7% year on year. And poker facing rising treasury yields, even the European Central Bank waved its concern over government bonds sell-off by increasing the pace of the bond purchases within the PEPP program. Until the Americans waiting for their coronavirus relief, money markets may continue their optimistic rally roughly by the mid of next week. The S&P 500 Broad Market Index has passed our weekly support level at 3,080 points and may now move towards next resistance level of 3,990 and 4,020 points. Would it succeed to meet these targets is hard to say at the moment. There is no intentions to buy the index at such high prices. So it is better to make a pause until next week when there is more light in future market direction. Oil market is experiencing technical correction after falling to $67 per barrel of Brent crude. No prices are moving towards a resistance level of $69.7 per barrel. Crude reserves data turned negative this week as reserves in the United States surged by 13.8 million barrels just in 1 week, beating modest upward expectation of 800,000 barrels. But a strong support for Brent crude at $67 per barrel and relief bill expectations hindered any further decline in prices. Next resistance levels for Brent crude are at $70.60 and $71.3 per barrel. Again, any purchases at such high prices are not desirable and better to be avoided until the next week. Gold prices managed to recover at $17.30 per troy ounce amid declined Treasury's yield from 1.61% to 1.48%. However, gold may perform another effort to dive to $1,700 per ounce. Any long-term targets would be clear that FOMC meeting next week. The greenback is losing its position on the FX markets, waiting for the Fed to direct it next week. However, volatility is expected to be limited before the meeting. The Euro USD this week is trying to return to the resistance level of 1.2040. So far, looks like a poor effort and would hardly be better today. And consolidation at 1.1950 is more likely. GBP USD is turning from the support level of 1.3920 with a target of 1.4040. However, the pair has little steam to hit this target this week and will likely end it to close to 1.3920. The USD JPY is sending mixed signals. On one hand, the nearest resistance level is at 110.50, and on the other hand, technical pictures suggest a reversal pattern at 108.5 to 109.0. Maybe it is better to take a breather here too until the next week when Fed Chair Jerome Powell reiterates his view on the market outlook. Well, thank you very much guys for listening, and that's all for the day. See you guys soon. Bye-bye.